All right. Hello, everyone. This is Matthew from Black Door Capital. What I wanted to do in this free training was to discuss an entry technique that I use, and I use it quite often. I'm pretty proud of this one. I found it or discovered it in my own back testing. Saying that, I have, after the fact, found some other people that have highlighted it. So while this isn't original to myself, I felt like it was at the time. So I just wanted to highlight it. I've coined it. The term I use is confirmation squared because it gives you confirmation of a trend changing or continuing, and then it just gives you a better technique for entry. So let's dig in here. So these are some. I'm on the daily right now, and this is a nice downtrend that I've highlighted, and you can see I'm using the 200. This magenta line is my 200 EMA, and it is used in this case as dynamic support and resistance. So let's zoom in, and what I want to do is highlight that it's a single doji. If you had price coming up here, sometimes candle patterns can be one, sometimes candle patterns can be two, three, to build out a pattern of a correction. In this case, it's a single doji, high wave candle, it's also called. There is a small body, so we could sit here all day and go on about that. But what I do is I take the fib and I start from the top to the bottom of that candle because that is our pattern. And if we dig in deeper, let's talk through this. So this is a 1 day pattern. It took a day for that doji to develop. If you had entered the next day, now this one would have opened here. So if you had entered that next day hoping for a rundown, you would have watched it go against you for a little while. What I do in this situation is this is your pattern. Here's your fib levels, and the 50% fib is where my sweet spot is. So you would have watched the market come up, hit that 50, go through the 61.8, approach the other significant levels of Fibonacci. But what if you notice the 50, it failed to break and close above it. The next day, it did the same thing. Now it opened right next to it, it moved on up, and then it sold off and it closed there. But you'll notice that it also failed to break above the 50, and if you notice, it is right on that 200 EMA. This signal is only getting stronger, and it's taking 3 days. So you would have had your stop up here, and you would have had your 2-to-1 risk reward down here, and you would have seen by the fourth day you would have driven right into your full take profit. Maybe you took some off and let the rest run. Maybe you trailed your stop. Maybe. But all this confirmation squared entry does is it gives you an advantage of finding just a better entry. Saying that, because of this, you will miss out on some entries that you'll watch price move off in a direction. I find I capture enough that it's a winning system for me. So once again, we have the doji. Price moved up into that 50 where our limit order was set, and our stop was up here, and we would have made a beautiful 2-to-1 at least risk reward on this trade. So that's just the one. If we move over here, I have another bearish engulfing candle. You can see in this situation, this is our signal. We have had price run up, stall, and kind of false breakout of that 200. We have a engulfing pattern here. So now in this situation, instead of a single pattern, we have this as our entry. If we fib from the top of the pattern to the bottom of the pattern, you can see, maybe just tighten that up just to be a little more on point. You can see that price, if we had entered at the bottom here, this wouldn't be as advantageous as moving up to here at that 50% fib level. You can see yet again, price moved up, was rejected, price moved up. It's like it's dipping its toes above these levels that are significant, and then it rushes away. So yet again, you would have had to spend 3-4 days watching your position go sideways, but we're swing traders, and that is not uncommon by any means. Moving along the same trend line, if we had zoomed in here, the signal starts to really build here, in my opinion, and then you have this 200 EMA, and you have now an engulfing pattern yet again. If we took the pattern and built it out to there, we can see the next day. So if this was our pattern, theoretically, none of this would have existed. So if we have this engulfing pattern, we have our limit order set up here. The next day, we may have thought we would have missed a trade. And we may have thought that, hey, this is, finding support on the 200 EMA. This is a breakout. Here we go. We're going off. But if we just stuck to our guns, managed risk, had our stop up here, had our 2 to 1 take profit down here, we would have noticed yet again, price would have nicked the 50% fib level. And in this case, 61.8 is the golden mean, the golden ratio. But in this case, and I find this so often that it didn't even hit that 61.8 level, that it triggered at the 50 just barely, and then a strong bearish candle again, and it's running away. Now we had a little pullback, confirmation, and then we're running away, and we would have got our 2 to 1 in and around here. So this is just once again highlighting some fantastic entries. That's 3 along one trend line, and that's the Euro USD, and that's on a daily candle daily chart. I'm using another pair over here. I just have a smattering of pairs. This one is interesting. I've labeled it as a good example for the follow through Fibonacci. So in this pattern, really, to me, this hammer would have been good enough for me to take the entry. I would have looked back, I would have seen previous support and resistance areas there, and I would have felt comfortable taking this. The next day, this is a beautiful engulfing pattern. Now, at this point, maybe we'd be kicking ourselves. Maybe we'd be thinking we didn't quite make it. We have our entry here, we have our hammer there, and maybe we didn't get in on time to see that we are, in fact, touching that 50% fib level. If we had a missed trade here where, oh my gosh, by this time, because it opened here, and maybe early in the session it produced this drop and then just carried on and closed up here, maybe we felt like we missed a trade. But if we followed that fib all the way up to there, we still would not have hit that 50% fib level again. The next day after that, we follow our fib, and you can see it was a strong up day, but it was strongly rejected. We still haven't hit that. And then on that third day, you can see, once again, because we followed with the fib, it would have triggered our 50% fib level here. And what a beautiful entry that would have been. And after that, price just completely accelerates, provides another signal up here. You can see that's up with resistance. And this would have been a beautiful entry. You would have been proud of your actions here. You would have found an amazing entry. Your stop's still down here. Sometimes I'm even in here as my stop, so really tightening things up. That's a more advanced technique. We can talk about that later. But at this point, I would have just had my stop here. We followed with the fib, and we got in on an absolute beautiful level. Really just highlighting the power and the strength of this, that even though maybe on that second day you think you missed it, stick with it because you probably didn't. I find price really needs to almost find its groove, almost find its correction in that price wave, because that's what we trade here. We trade the wave method, and we're finding flows of price action. When things don't make sense to us, we don't take the trade. When things make sense and we have confirmation on many levels, we take the trade with risk management. It's a winning strategy. It does not need to be complicated. So once again, another follow through fib level. Here's our pattern. So we have a beautiful engulfing candle here. This would have been a terrible entry just with the asymmetrical risk reward. We want to tighten things up. So if we, using the pattern that we've committed to, if we had entered here, this is an entry that would have our stop down here, and you would see we'd be 2 to 1 might be up here. So you would have really had to wait to get up there. Waiting can sometimes be exposure through economic news data, through different drivers in the market. And what we want to do is get in and just get out. And if the market's not giving what we want, we can get out. But in this situation, we would have had a beautiful entry. So here is our pattern, the engulfing, a beautiful bullish engulfing candle. And if we entered here, we would have had a terrible entry. But if we had waited just the next day, would have run against the position, nicked our 50, once again, did not touch that 61.8 level, nicked our 50 and ran off. And that would have been yet again an absolute beautiful entry. You could add our stop down here, could add our stop up here, and then we would have captured our 2 to 1, potentially more. But 2 to 1 is what we're really going for here. Our success rate's fairly high, so 2 to 1 is giving us a winning profitable system. So another entry, another example here, we have a high wave candle. Some people call it a doji, spinning top, what have you. We have our pattern defined by Fibonacci, and you can see that next day, if we just relaxed, weren't watching the charts, had a limit order with our risk management, there's our stop down here, nick the 50, and very quickly we would have gotten into a 2 to 1 by the time we hit this resistance. So you can start to see some of the patterns and how powerful this is. Now, I have just gone through the charts for the sake of speeding this tutorial along and have found areas of significance, but you could just quickly poach areas. Okay, we have a long wick here. Maybe we could call this a piercing pattern if we want to get very technical. Let's have a look. 100, sure. It is technically a piercing pattern. What we could do is we could run this pattern because we're going to the extremes of the pattern, and you can see yet again it hit the 50 and carried on. Maybe it failed. We would have at least gotten to break even before it turned around, and you probably would have made a couple bucks. So whether you call that a break even trade or whether you call it a winning trade because you did make a couple dollars even after your swap costs, if there were any, that's on you, whether you call that. But that is just another example of a great entry. And using our risk management, maybe we took some off the top here, but it got us to, in my opinion, if you had your stop down here, it got you to almost a 2 to 1, really almost a 2 to 1. So that's up to you where that pattern would have ended with your trading, but you would have had at least a trailing stop into profit because this would have taken a few days to get there. So you would have maybe sat at your charts in that time, or if you use software that trail stops, or if you use alerts as you start getting up into this resistance zone. So that was the S&P. Do we get all of those? Yeah, looks good. All right. So, and this doesn't just have to be currency pairs. It doesn't just have to be, I'm using the S&P. I'm using oil. We'll move on to gold. So a beautiful oil entry here. And if we use our fibs again, once again, it's the extremes of the pattern. So if we're using a fib here, get a little bit tighter, was not the entry that we wanted to use up here. If we just simply sat on our hands, you can see how it just keeps kissing that 50, fails below it, and rolls off and rolls away. At no point did it touch the 61.8. So it gives you, the 50 is just so powerful to me. And I know of any true technicians out there, that 50 is not a true Fibonacci level. I appreciate that, but that's not what we're here to chat about. We're just chatting a great entry technique that you do not need to sit and watch charts all day. You could see this pattern develop at your 5 o'clock, as the market closes, when you're reviewing your charts at the end of the day. And that, of course, can be any time at the end of the day. It doesn't have to be right when the market closes. It can be later in the evening, up into the morning. And so if we just zoom in again, you can see that the market rolls over, hits that, and carries off. It's a pattern that I love trading. I really do. And it takes a bit of patience, but if you can't get the patience reined in on entries, you're not going to get the patience reined in on exits, because that's where the real challenge comes in. And to try to watch a position, let's say this other area that I have highlighted here, your pattern once again is a bearish engulfing pattern, and we're doing this at levels of resistance and support. So it's significant levels. We're not just picking in and anywhere. We're not just picking random flags here and there. We're picking areas of support and resistance. So let's see if we can, without zooming in too much, I guess I will zoom in a little more here. If we have our pattern here, you can see once again, we missed it. So this would be an example of where that 50, you held your guns, and then to watch price move away from you would have been terrible. However, I think if we get back into this pattern, and if we had missed it, moved our fib down because we're professional traders, look at that. You got into your 50% fib level. So it's required that you move your fib levels down And of course, your entries have to move with that. And be mindful of your asymmetrical risk reward and your risk management, that you're not just increasing your stop size. You want to be tightening things down and managing that as you do that as well. But imagine getting in on a 50% fib level. It didn't go anywhere against you at all. It nicked, you're underwater for probably a couple hours until the market decided to just give you nothing but profits here. So that's an amazing gold entry. Now, saying that, you would have maybe right here really started thinking, oh no, these kind of candles, these kind of hammers of inverted, you would have been questioning whether you're going to get out at this point. Now it has a bit of a flag effect, but then the market rolled off and just carried on and gave you a beautiful. I believe this idea was highlighted in one of my ideas. But anyways, so there's two ideas just on oil alone. And finally, let's have a quick look at our gold. If we had used gold as an example, so I have a position two, I have this moved in. This one's a great idea. So I have it labeled as it's a great position trade because you would have had to hold on. And I'm just going to show you what I mean by that. So once again, we're pretending that none of this exists. It's backtesting is easy when you know exactly what's going to happen. And you want to try to, here's your pattern. It's a single high wave candle, in my opinion. I don't use the word doji unless it truly is a doji. If you had your position set, that's it. You've made your decision. You're going to get in. Here's your stop down here. And now the market didn't come back to your 50. Just ever so slightly missed you. Look at that. What a tick off. So it's carried on. It's carried on. It looks like it's breaking out. Oh, it's pulling back. It's going to touch my 50. Oh, this is great. I'm going to make $1 million, and it's carrying on. It's carrying on, and it's just went sideways. So we follow it with our fib in this example. Follow with our fib. We still haven't touched that fib, or pardon me, we did. So we move on up after that big bearish move. We wouldn't have. I'm not going to even edit this video, so I want to show that we run up and then we are now moving along, following our fib. We missed it there, it didn't come back. After this run up, we move up our fib, it didn't capture us. We were going along. There's where I'm going to leave my fib. It could be a little tighter. And as the market meandered sideways for what? Some 60 days, so 2 months, you were in a consolidation period. And you can see maybe it hit it there, depending on how you had it set, moved along, meandering, doing nothing, worrying you, and then there it is. It drops through your 50% fib level, even shows a nice rebound, carries along, and you can just see that price is failing to react to that level. It's failing to close below it. You might have been worried here after it's been triggered, and at that point, you can just see that the market gave you one of the best entries. If you had just simply waited for this, you would have washed out what, the other 45 days. If you had just simply waited, you wouldn't. And maybe if you are a position trader, I'm not sure whether you would have been paying the swap. I think you would have been. You might have avoided 45 days of swap payments. And something like that, how powerful this entry tool is, and to then enjoy the movements of the market in the direction that you want while adding to your ability to be patient and be disciplined. This is one of my most favorite entries. I thank you for watching. I'm calling it the confirmation squared. This is Matthew with Black Door Capital. Thank you very much.